Hi, this is Zach Meir from Zach's Traders Cafe with a look at the major markets on Friday, the 1st of July. And amazing moves here for the FTSE 100. We spotted the support line here from basically from February at 59.50 as soon as it was hit on Monday, and really there's been no looking back ever since. The situation now is that even though we've bounced quite sharply, we could see a move to 66.20, which is the top of this rising trend channel from the beginning of the year. Any dips back to the former 63.80 high from earlier this month, regarded as a buying opportunity, and early and end of day close back below that would even question 66.20 and perhaps even more over the next couple of weeks. Next up, we've got the DAX, which has underperformed the FTSE, but still looks as though it's on its way. 94.84, the last, 94.32 rather, the last support in June. And while we're above that on an end of day close basis, it looks as though this market will move to fill the gap from the beginning of the month towards the 10,000 level, and perhaps head as high as 10,300 or 10,400 by the end of July. Stop loss back below 9,400 at this stage, but as you can see from the last couple of days, support here came in well above that area and above really the 9,500 zone. On to the US markets, and they have been rampant to say the least. Gap up for the Dow on a couple of occasions now. A bear trap rebound from below the 200-day moving average at 17,257, and really looking for a new leg to the upside above 18,000 going into July. Bit of July the 4th celebrations there already. That resistance line projection from March heading to 18,800, and that's the target on an end of day close back above 18,000. Strong position as well, of course, for the S&P here. Bear trap rebound from below the 200-day line as well, and below the 2,000 level. Looking for a target really back up towards the 2120 zone, which was previous resistance from June, and then on to as high as 2200 by the end of the month, given that would be the upper parallel of this uptrend line from January. Stop loss at this stage back below the 20-day moving average at the 50-day moving average at 2076. On to Nasdaq 100, which ironically looked to be the most weak of the major US indices, but with this gap to the downside at the end of last week. But bear trap rebound is what we've got with an island reversal, effectively, given the gaps that we've had, or the gap we've had to the upside earlier this week. Looking for 4,500 at the top of this falling trend channel over the next week or so, given how strong this rebound has been. Stop loss at this stage back below the 10-day moving average at that's at around the 43.60 area. Moving along to the currencies, and cable weakened a bit as Mark Carney was speaking yesterday, back towards 132, but seems to have settled down into a little range here. So we're assuming really 132 to 135 for the next few sessions, and only a break outside that on an end of day close would really determine the major direction here for this cross. RSI at 55 does suggest that the next stage here could actually be towards former February support of 138 rather than sub 130. On to the euro, and here we've got still pivoting around the 200-day moving average, which is normally at 110.95. Really want to see a weekly close either above or below that to determine the next direction. But RSI also at 55, so that does suggest that the next move here should be to the upside and towards, let's say, 114, which was early June resistance, rather than any further probes below 110. Dollar yen stabilizing as well, just approaching this former 103.55 support rather from earlier in June. 10-day moving average 103.50, so that is combines with that area, and so therefore we're looking at around a half a yen upside from these levels, but only above 103.55 on an end of day close basis abandons the prospect of one more dip back towards the 101 to 102 band, which is this falling support line from February. Next, finally, the last market in the selection is gold, and looking very strong indeed, given the way that we had the indices rising and also had gold rising yesterday as well. Bounced off that old 1315 high from earlier in June, and really there doesn't seem to be any resistance here now until 1350 plus, which was last week's brief peak in the wake of the Brexit vote, and that could be hit over the next week or so. Stop loss at this stage back below 1300 and back below the 10-day moving average at that level. That's it from me. More updates at the same time on Monday.